The Fed cut interest rates. That's the headline news of this week, right? The Fed cut interest rates, and we have buyers that are excited about it. But the biggest question is, how does that news affect the current consumers who's going out to get a 30-year fixed rate mortgage? In this video, I'm going to break down the relationship between the Fed rate cuts and how it actually affects homeowners who are going, or home buyers who are going to get a 30-year fixed rate mortgage, and the actual real relationship or correlation you should be following to be able to predict that, right? So let's get into it. So the Fed cuts rates. That has a more direct impact on short-term lending, such as credit cards, auto loans, home equity loans, business loans. That is a better reflection of who will receive the quickest impact on the cut rates from the Feds. Now, the 30-year fixed rate mortgage, that follows your more long-term lending. That's your 10-year Treasury, right? That's the bond market. And so the 10-year Treasury yield, it's updated every single business day at 6 p.m. HomeTreasury.gov, right? And follow the updates on what the Treasury rates are every single day. And now the relationship between the Treasury rate, the 10-year Treasury rate, and actually the 30-year fixed rate mortgage is on average, right? The average over the last 50 years been about 1.76%. Now, we would say that the average relationship, right, on the scale is about 1.5 to 2.5%. So that means if you go and look at the 10-year Treasury bond, right, the 10-year Treasury yield, and I think as of today, it was 4.61%. So if I'm going as a buyer to go and get pre-approved for a mortgage, I can expect to receive a interest rate, and this is par. Par means like you don't have to pay any discount points or anything, right? So at par, I'm going into a mortgage application. I know that I should expect an interest rate between maybe 6.1% to maybe 6.7% based on the 10-year Treasury yield. So being that the Fed cuts rates by 0.25%, all right, by a 0.25%, right? So it's 3.75% to 4% where the Fed rates are. Again, that does not have a direct correlation to the actual 30-year fixed rate mortgage. Yes, that does mean that the money that the lenders are borrowing from the Feds is cheaper. And so, of course, the lender can lend more money, right, and also offer lesser rates over time. But it does not have a direct correlation to your mortgage, 30-year fixed rate mortgage. But yes, it is good news that the Treasury, that the Feds cut rates, but that does not have an immediate impact on home buyers. Again, go and follow the 10-year Treasury. That's going to give you a better insight of where you should see your expected mortgage rates. Now, even though we say that you should expect the mortgage rates at 6.1% based off the 10-year Treasury off today, that does not mean that you can't receive a 5.6, 5.7, 5.9% interest rate, because you can always buy points. That's par, right? That's par, meaning there's no points being paid, there's no credits being applied. At par, that's where you should be looking at based off the 10-year Treasury bond. Listen, I'm Emmitt, your local real estate broker, well, Florida and Georgia real estate broker. If you're looking to buy, sell, invest real estate here in the state of Florida or Georgia, be sure to reach out to myself or my team, 786-277-1190.